We've just released the 2021 version of the core chart book. The core chart book's been running for 6 years, and it aims to tackle all the key changes within index unit trust, ETFs, and other rules-based strategies within South Africa. Globally, we've seen a massive adoption of passive kind of strategies. If we look at Vanguard and at BlackRock, they each manage over $6 trillion today and are the largest asset management firms in the world. We are seeing similar trends unfold in the South African market, where we've also seen substantial growth over the past 10 years in these kind of strategies. I mean, as a start, our own business has grown from under 1 billion in 2012 to over 8 billion at present. When we started the core chart book and we measured the assets under management in 2015, our business was sitting at 7 billion and the industry was sitting at about 148 billion rand. Since then, we have grown about 7-fold, while the passive industry has grown about 2.5 times. So this is just representative of the growth that we've seen in our own business. We've also seen some of the changes. Originally, most of the funds that were available in the SA market were single asset class funds. Over time, the rules-based or passive industry has started mimicking the broader industry, where the vast majority of assets are sitting in multi-asset funds. Our core diversified fund, in fact, is now the largest rules-based or passive fund in the SA market, sitting at about 17.7 billion rand. Now, in the past, passive strategies were seen as something simple. They just track market indices, and you should be able to get market kind of performance, less fees. That landscape has changed quite substantially. I mean, if we look at this flow chart, right at the bottom you get the single asset classes, and then under that you get the market cap weighted strategies. And these are typically like our all-share index. It is like the MSCI World Index. And then we've also seen the rise of what is known as enhanced strategies. Originally, most of them attempted to mimic active funds by finding systematic ways to eke out alpha in the returns. More recently, we're beginning to see funds that has a really strong responsible investment theme to them. Some of these are termed under the label ESG, which stands for environmental, social, and governance. I would say this is probably one of the biggest spaces in rules-based investing at present, because that is where a lot of the regulatory pressures are coming from, and so increased adoption or incorporation of these kind of considerations, I definitely foresee will play a big role in the rules-based market. Then, of course, multi-asset. This is combining different single asset class indices or index funds to provide solution funds or like balance funds to investors that are used in for retirement savings and in discretionary portfolios. We, therefore, and following many global commentators on the industry, therefore refer to all these strategies as rules-based investing. As the one thing they all have in common is that they follow predefined rules, which one can then use to measure versus other similar kind of strategies. Now, the classification we use is basically we'll measure the growth of assets across 3 categories, and that is the market cap weighted, the enhanced strategies, and multi-asset. Now, if we see how that industry is unfolded in the SA market, you can see that both the market cap strategies and the multi-asset strategies have seen some strong growth over the past 5 years, as you can see on the chart on the left. The multi-asset is now sitting at about 83 billion, while your single asset class market cap assets are sitting at about 230 billion. The total assets under management in the SA market as at the end of 2020 was 336 billion, more than double the amount of assets that were invested in 2015, that was around 149 billion. The chart on the right shows the collective investment scheme market cap, where you can see that multi-asset has probably seen the strongest growth over the past 5 years. The one space where we have not seen a lot of growth is in the enhanced space. And in the past, most of these enhanced funds were smart beta kind of strategies, but one can expect that part of the market to start seeing stronger growth as more and more investors start looking into your responsible investment themed funds. Now, if we look at where most of the new money or flows came into the industry over the past 2 years, one can see similar trends to what we've seen in global markets, where under normal market conditions, we still see a lot of new flows going into active funds, as you can see in the 2019. If you look at under SA multi-asset, about 35 billion in new flows came into the SA market, of which 7 billion was passive. In 2020, that was a much tougher year. The rules-based market still attracted assets. So in other words, they got net flows of about 3 billion rand, while the active funds on a net basis actually lost 2 billion in assets. And so those are the trends that we've sort of observed globally as well, that in difficult times, it is passive funds that maintain their new inflows while the active counterparts fall behind. And that's broadly where a lot of the ground is being made up by these kind of strategies in SA and abroad. If we look at the rules-based market share, one can see now in the SA multi-asset space, which is the largest in the country, it's nearly 1.4 billion rand. Rules-based strategies make up about 52 billion rand, which is basically a 3.7% market share. As Nedgroup Investments, we manage about half of those assets. The spaces where we've seen the strongest adoption of rules-based investing is really in the equity space. So in the SA equity space, one can see that the market share is about 11.5%, while in the foreign equity space, it's nearly 25%. And that is where we're currently seeing some of the strongest flows across both foreign equities and foreign multi-asset funds, where the market share of global multi-asset funds is sitting now at about 4%, up from about less than a percent a few years ago. The next thing we look at is the different asset management firms managing these assets. As one can see, the largest 5 funds or the largest 5 firms manage nearly 90% of the rules-based assets in the SA market. It is firstly Satrix and then Old Mutual as the 2 large life insurance companies, and then it's Signia, ourselves, Nedgroup Investments, and 10x. If you look at the growth over the past year, you can see that Signia, ourselves, and 10x have seen the strongest growth, but all firms have grown quite substantially. Most of these 5 companies sort of focus on different market areas, and one can sort of see that if you firstly look at the chart on the left, where we look at different investment vehicles. So this includes foreign collective investment schemes, so in other words, offshore structures, and you can see there it's only really Satrix and ourselves that manage funds. And the reason for this is it's very difficult to go and compete with the global players such as BlackRock or Vanguard that have already got scale. And a lot of these assets are actually invested in a BlackRock underlying fund where we cannot mimic the benefits of their scale from a small South African asset management perspective. But then you also see that there are substantial assets in unit trust, ETFs, and it's only one player, Old Mutual, that really have substantial segregated mandates. The others, most of them are in some form of pooled vehicle, which is also in line with what we've observed internationally, where in rules-based investing, scale becomes really important. You really want to get your costs down, and the only way that you can do that effectively is by pooling of assets. The chart on the right shows how different firms focus on different types of investment strategies. So you can see ourselves and 10x focus on multi-asset, whereas a lot of the other players have both multi-asset, single asset class, and enhanced strategies. One of the other features of the core Chartbook is that we look at fees and trends in fees in the South African market on an annual basis. Now, fees form a very important component of the investment thesis behind passive investing. It is the lower fees that generally give them the edge. And to some extent, that's illustrated on this chart, where we've looked at the average rand invested in different market categories. And so, for example, this specific chart is for the largest category, the multi-asset high equity. So this is typically your balance funds that are used for retirement savings. And what you can see if you look at that gross returns, the asset-weighted gross, or in other words, before fees, a return of the sector is marginally ahead of a representative rules-based fund. In this case, it's the core diversified fund over the 11 and a bit period. So you can see there's sort of like a marginal outperformance before fees of about 0.5%. Some of that is attributed to some of the larger funds having high equity allocations, so there's a little bit more risk, and then having more foreign equity and not having any foreign fixed income. If we go and have a look at those same returns after fees, you can see that on an asset weighted basis, the category underperformed a representative rules-based fund by about 0.9% over that period. And that sort of just illustrates the importance of fees. And what we try to do with this analysis is also to sort of come up and see how competitively priced the industry is. As part of that, we went and we actually looked at the asset weighted costs in the industry. So while most performance comparisons would make use of retail fee classes, the reality is that actually the vast majority of assets are invested via platforms that charge a slightly lower fees. When you add platform fees and all those things together, generally investors pay similar fees to the retail funds. And then as a final, just a reminder that our multi-asset core range is available via most platforms. In the retirement space, they are our Reg 28 funds of Core Accelerated, Diversified and Core Guarded is available on most of the large umbrella funds. And then on the list platforms, all 4 of the funds are available, and on offshore platforms, our Core Global Fund is